We're now going to touch base with the top management of Meghmani Organics. If you were to see it, the fourth quarter revenues have grown 77% year on year to come in at 813 crore rupees. So let's talk about this and more with the CFO, GS Chahal, who's joining us live on this edition of The Market. Mr. Chahal, pleasure to have you here. So we've seen, the kind of growth that has come in, 77% year on year. If I look at the fourth quarter, what is all this thanks to higher capacity utilization going forward? How will you maintain this? And at a time when inflation has kicked in, input costs also going up, how will you protect your bottom line?
Yeah, good morning, and thanks for the opportunity. We have given a very good set of numbers during the year, despite the challenging environment on account of volatility in the raw material prices, as well as global supply chain disruption. Going forward, as we see, central banks across the globe are taking steps to squeeze the liquidity and control the inflation. And here also we are seeing some softening in the raw material prices going forward in the coming quarters. As far as margins are concerned, so we are well as per our margin guidelines, where in agro space we are expecting around 17 to 19% EBITDA margins, and we will continue to deliver that. In case of pigment division, during last year there was a spike into the crude prices, which is directly linked to our raw material prices in pigment division. So that has impacted the EBITDA margins. And now, because the new prices for the finished goods are being negotiated at the current level, and we are seeing in the coming quarters the margins for pigment division will also get normalized.
All right. Good morning, Mr. Chahal. I just wanted to talk about the top line growth as well. That saw a near 50% growth this time around. There has been an improvement in your volumes as well. What kind of demand trends are you seeing? What kind of guidance or outlook can you give us when it comes to the overall volumes as well?
If you see the volumes in agro division, we have commissioned our 2,4-D project in FY21, where we have doubled the capacity to 21,600 ton in our herbicide. That has driven the volumes. Apart from that, we have done expansions in other products as well. So this is the way it has grown. Now going forward, as far as volumes are concerned, if you see in our agro division, we are already commissioning the new multi-purpose plant with the capital outlay of around 350 crore, which we are expecting to be commissioned by end of quarter 2 or early quarter 3. So that will drive the volume and revenue growth in agro division. And at the same time, we are also working on the next phase of expansion in agro division. So once we complete this, so we are going to announce that also, which will drive the growth in agro division going forward.
Okay. Now, pigments has 80% of revenue coming in from the export segment, and you earlier said that the price hikes are transferred with a lag and that discussions are currently on with your clients. What have you been able to do when it comes to rising prices, and what is the outlook when it comes to the pigments division?
Yes, you're right in case of pigment division, because these are the contracts which it is B2B business, and where the customer has again to make contracts with the end user. So accordingly, it is a lag of almost 1 quarter. But we have, because there was a lot of volatility in the quarter 4 due to this Russia-Ukraine issue. And at that time, customers also hold back finalizing the new prices, and we are also cautious on that front. So now slowly, so those are getting normalized. Even in the raw material prices also, we are seeing some softening happening. And those prices are being negotiated, not on long-term basis, but on the 2 to 3 months basis. And we are able to now take the increase in raw material prices, which we are able to pass on in our finished product prices.
Can you tell us a little bit about the agrochemical side of the business? What are your expansion plans? It's a hot space at the moment, and just the way the prices are also moving up, is it impacting capex?
You are right, actually, because this is due to this China plus philosophy and a lot of sentiments which are against China due to uncertainty on the supply front and other issues. I think all the companies are looking for the second source in India, and we see a very good opportunity for Indian entrepreneurs in this space, and companies who are backward integrated will be able to supply on sustained basis. So those will get benefited. And Meghmani is one of them who have all our facilities which are backward integrated. We manufacture our own intermediates, technical formulations, and we are expanding in our brand business as well. On the expansion front, this new multi-purpose plant, which we will be commissioning, as I mentioned, in the Q2 end or early in Q3. So we are coming with the new molecules, which are either any one company in manufacturing in India or not produced by any company. And those will be the high value products and literally of patented products. So those will drive revenue. And I mentioned we have enough infrastructure available, and we will be going for the second phase also. In the next 3 years, by 25, so we have total capital outlay of around 750 crore, which we'll be spending in both the agro as well as in pigment division. So we have growth plans, and we see around 15 to 20% growth rate in the next 3 to 4 years.
Okay, so let's see how all of this pans out. Mr. Chahal, thank you so much for being live with us and taking us to the fine print of your earnings.